let's talk about a couple things that have come up in our one-on-one sessions that I want to make sure that everybody understands. And I think if you watch the YouTube video that I did a couple days ago, hopefully that helped. But a lot of it has to do with when you're back testing. Like you're back testing and you're thinking it's one thing, your count level is one thing, and then it just doesn't happen that way. So you could be like, what was a good example? Was a GU, I think it was. You could be here at this low, and you're counting the ADR, which is 338, and so you're thinking that this is going to be peak formation low, right? So you basically mark it off as a peak low. You mark this off as a level here, and you might mark this, this period here as a level also. Or hell, you might even mark this up as level 1, 2, and 3, and then go up for a reset, right? So far, that makes sense. The part that won't make sense is that whenever you go from here to here, from the reset down to where the bottom is, it's not a full cycle, meaning that it's not anywhere near 3 times ADR. It's only 2 times ADR. So what does that mean when that happens? All it means is that you basically need to adjust what you thought the levels were. So instead of thinking, of these as levels here and a reset and then another 2 or 3 levels there, you have to think about the bigger picture. And this entire thing is actually one level. This is another level. This would be another level. So from here to here, if you fib it, or not fib it, but if you measure it, it's about 430 pips or so. So basically, the price action moved. It was about, I want to say it was like 3.5 or 3.2 times ADR. But at the time, you don't know that at the time. You're just going off of what you have so far. And so back here, so far you have what you thought is a reset. That's happening here. There's level 1, and then it's moving down, and then so forth and so on, right? But if you think that you're going to be in a reset based on the price structure of this moving down like this, right? Because you're thinking it's going to go up. If this is a peak formation low, this is level 1. What you can do is if you see a movement like this and you're like, all right, the likelihood is we're in a reset because we've already passed this low now. Okay, so why don't you project out how far down do you need to go to meet 3 times ADR? So from the top, 3 times ADR is around here where this line is. So now you know your projected area of at least 3 times ADR is going to be where that line is. So if for any reason price action doesn't make it there, like in this case, it didn't go there at all. It went only 2 times ADR and then reversed. You have to readjust what you thought was the levels that you were counting. So you either need to zoom out and be like, okay, what is the only possibility that would make sense of it? Do you get what I'm saying? Would it make sense for this to be the peak here? This is definitely a level here. That's definitely a level here. You know, would this be the other level? And so what's from here, from the very peak here, from the very peak to the bottom here is about 148 pips. That's basically over one times ADR in one day in one move. So this would be the level, this would be the level, and that would be the level. Does everybody understand what I'm talking about? Do they get it?
Yeah, I see a lot of these happen often, actually.
You see a lot of what?
I see a lot of these happen often where you think it's only two levels, but you know, you from the peak high there was another level there hidden, you know.
Right. So what was the one thing essentially that you weren't using before that I think you should use now?
Uh, you ask me, it's ADR, definitely.
ADR, right?
Yeah.
So, and listen, the ADR is not perfect, right? We're looking at around 3 times. We're just projecting out at least 3 times. We at least want 3 times to have a full cycle, right? So every day that you get new data, you just adjust. Just like if you're trying to figure out weekly cycles on a Monday through Friday type scenario, you're adjusting. That's all you're doing, constantly adjusting, 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 adjusting. Every day you're adjusting based on what new data you have. You can start to make predictions of what potentially it could be, probably after Tuesday, right? But before Tuesday, you really can't just, start to say it's going to be one type of a weekly cycle or another, you know, unless you start to get, um, unless you get like a situation where you have like all of the EMAs together, or something like that, or they're running straight through price on like on Sunday, Monday, kind of actually like where it's at right now, where you see all the EMAs are bunched together. But typically, you'd also like to see on this TDI, you would see the lines more at the 50 here as well. This is on the higher end. So you see how these blue lines are banded up here like that. Typically, you'd want to see the bands like this, one here and another one here, and then you have the yellow going through the middle, and then you have the green and the red. It'd be something like that. But very important that you just understand that you have to start putting together pieces when you're back testing. If you're putting it together via, the ADR, let's say if you're just using that to start putting the bigger pieces together. And you don't have to if you zoom out of this, right, you're looking at a huge big movement like this, right? Like you don't have to start from down here. You could start because down here, this is like freaking March of 2020. Like, how is that going to help you right now? It's really not. Start from the soonest thing, from the very soonest high, from the very soonest high that you see. on the chart. The closest high that you see so far is this one right here. So that's what you have to go off of. So start from there. Don't try to go back like a year and a half, you know, back over here where it's, I mean, there's multiple cycles that are in here. And so you're spending all the time over here when price action is all the way up here. You get what I'm saying? There's no reason for you to do that. So if you go to a chart, any chart, let's say, I don't know, let's do this one, for example.
Yeah, I have a quick question. You see how price was bouncing off that 200 on the 1 hour?
On this one?
The US, no, that was the pound USD. It's all good though. It's all good.
On the pound USD?
Yeah. I was gonna ask a quick question. So I see like a big macro M happening from far, because don't you think like a price bouncing off that 200 is gonna push price up to form a bigger M, a macro M?
So you're talking about this M here?
Yeah, so there's this M right there, and then price goes down to 200, and then you see how it's like
okay, so
gonna
this would
do
be the
another
800.
cycle.
And so you're saying
Oh, the
bouncing
800.
off the 800 and going back up again?
Yeah, kind of thing, and then it's gonna form like a macro M on a bigger.
Well, for that to do that, you basically need price to break above 140.
One for, oh, okay, right, because that's the
If
psychological
you're implying that this would be like a huge M or something.
right type of thing.
Right, before you can even think about making that prediction, price needs to get above 140.
Okay.
Because right now it's literally in the middle, right? And
Right.
so if you're counting this as just a peak formation high, even on the higher time frame, this is still level one here.
Yeah.
You know, so
Right.
you technically still have a ways to go. And because you're on a daily, this shit could take fucking months, years, who knows?
Right. I'm just asking because of the past M's that happened. They always kind of went back to the same level almost, and then dropped.
So if it's gonna do that, I mean, you need prices to let you know and break above 140 first.
Okay.
Once it breaks 140, then you could. You're trying to predict this.
That's
what
what
you're
I'm
trying
thinking.
to predict.
Yeah. Literally.
Yeah. You're literally trying to predict this.
That's what I was thinking about. We'll see.
But I mean, for that to happen, you need price to break up above these daily highs here of 140. So if you do that, then yeah, you got a shot, you know, because then you're gonna get basically a reaction up here, and so you're gonna see if it's gonna go blow right through it or pull back.
Okay. Yeah, I appreciate it. Thank you.
Yeah. So those of you that are on week 9 or 10, what questions do you have?
When did you say risk management was? Which week? 10th?
I mean, it's definitely one of the next 2 weeks. I think it's 10. I think it's next week.
Cool.
I thought we did risk management this week.
What did you have? What was in the video this week? Wasn't it just a trading plan, wasn't it?
No, it was it. Well, my bad.
When you get to the risk management, trust me, you're gonna have questions.
Okay.
So if you don't have risk management questions, then yeah, you haven't watched the video. You haven't gotten to that video yet.
Okay.
Yeah. Because you're gonna have questions about it. So you haven't gotten to that yet. All right, so let's talk real quick about, now that you've been working on a trading plan, start thinking about what you're going to put in the trading plan. So like if you think about, you know, trading plans in general, let me show you what I'm talking about here, a couple different ones. Trading. No, it's PDF. So when you first start out with a trading plan, you might start out with something that's really big and really long. And I don't know, it could be like 4 pages long. But what I want you to do is, so this is a trading plan from someone from like 3 classes ago. And you could see that the plan itself is long, right? It's crazy long. It's like 5, 6 pages long, 6 pages long. So what you need to do is, once you're done writing a plan like this, you need to basically take this plan and break it down into a simple list like this. A list of simple yes and no things. Yes and no, yes and no, yes and no, yes and no. The reason that you're going to want to do this, as far as making it a very yes and no type of scenario, is because whenever you have a yes and no and you don't have a maybe in it, then the maybes become anything as a possibility, right? So yes and no is very black and white, very straightforward. It's either there or it's not there. So when you're looking at your trading plan, start thinking about what it's going to look like in a form of a list. And so these should be like questions that you ask yourself. So like, let's say, for example, if you're looking to trade specifically, let's say type 3 setups is, you know, your ideal preferred thing that you want to do, right? So if type 3 setups is going to be the trade setup that you want to trade, what are going to be the things that you could create a list around for specifically that setup to work with whatever pairs you're trading specifically? So what do you think are some questions that you should be asking yourself whenever you're looking into taking a type 3 setup?
Mark, I think this is one of my big questions for type 3s. I can list a few of the things. So for example, bouncing off of the 50 and then the TDI. But type 3, a lot of times I find will get kind of stuck in the accumulation where it's like, is this a type 2 or is this a type 3? And so I'm wondering if within my trading plan, I should say that it's clearly a type 3 and it's not kind of consolidating and looking like it could be a type 2 as well. Would you
Right.
recommend that?
I would recommend for you not to trade type 3 setups on accumulation cycles. And that would probably
Well,
eliminate
I
that.
mean more like just come as it's coming out of Asia, you know, so maybe the week is a, you know, starting to be like a weekly cycle, but let's say out of Asia, it just hasn't moved much. Say for the first hour or two of London, it's been accumulating between Asia high and the middle of Asia. That's where I get most stuck. You know what I mean?
Yeah. So in those particular scenarios, like I guess my question to you would be, what's your bias?
Okay, so looking at the levels and the bias of the direction, and then using that as my guide to see if type 3 would work there or not, right?
Right. So the number one thing should always, the first thing on any list is directional bias. Right? What's your directional bias? Or ask yourself the question. Better question is this. Do I have a directional bias? Do I have a directional bias? Yes or no? All right, that should be the first question. Do I have a directional bias? Yes or no? So think you can even build like a little, I don't know, I want to call it like a diagram or something where you could have like, you ever seen those diagrams that are like
Kind of like a tree map or a mind
tree map? Yes,
that's what I've
like
been trying to do.
directional bias, yes or no? No, okay, no goes here, yes goes over here. Do you get what I'm saying?
Yeah, that's exactly my format that I've been trying to do, and I think I've
Yes.
been stuck with that. Like,
Yes.
you know, is this clearly a type 3 or is it getting confused with a type 2 and then deciding from there what to do?
Yeah. So I think what you're trying to do is you're still trying to figure out the pattern.
Right.
You know, what I'm trying to do is I'm not trying to figure out the pattern. I know what pattern I want to trade. I'm trying to figure out whether the trade setup fits what I'm looking at. You know?
Okay.
So if there's a an Asian range that's super small, or maybe where the bottom half of that Asian range is moving, consolidating on the bottom half of Asian session, right? And it's made basically like a major move in one direction. So kind of like this.
Mark, we can only see your PDF right now if you're trying to
Yeah.
draw on the chart. Okay.
Kind of like this. Do you see this?
Yeah.
So you see how price is on the bottom half?
Yeah.
Right? Price makes a huge move, sticks to the bottom half. Right?
Yeah.
So if it's on the bottom half here and you have this 50 coming across, sweeping it like that on the very top, like what are the possible trade scenarios that would give me the best possible trade that I would want out of this? You know, I'd probably want a type 3 that pins to the 50 here, or a type 1 that goes all the way up to the 200 and gives me a type 1, right?
Right.
So for me, if the trade setups that I take have to have they got to have a pin. It's pinning somewhere. If pinning to the 50, pinning to the 200, it's pinning somewhere. The reason I take trades that way is because it gives me an extra form of confirmation that it's pinning somewhere or something is pushing it down or up, or whatever case may be. So
Yeah.
if I'm taking trades of type 3s, I want to have, do I have a directional bias? Yes or no, right? The number 2 would be is I need to have a pin. Can price action give me a pin to the 50? Yes or no? And so I'm breaking these up by specific types, right? So this is not like type 1s, 2s, or 3s. This is specifically for type 3. So can price action give me a pin to the 50? So if you look at that example that I was looking at before, right, which was this one here, when you're looking at it from the beginning of Asia, is it possible that I can get a pin to the 50? Yeah, it's possible.
Yeah.
Right? So that would be like an ideal setup that I would want to take, is something that pins to the 50. Another thing that you can ask is for like 3. Does price action give you a pattern to trade? It could be something like, in this case, if it's a type 3 setup, right, is it giving you an M or W? Or are we talking about just railroad tracks, star patterns? Does it give you any of that? Right, so these are things that you got to have, right, that I got to have in order for me to take trades of a type 3. Another thing that I got to have is I got to have TDI helping me make confirmations. So you can ask a question like, is the TDI giving you a confirmation on the trade? So in this case, I'm basically asking myself, is the TDI bouncing off the 50? Is it bouncing off the 50? Is it making a bounce anywhere at the 50? Is what I want to ask myself. Because that'll help you confirm, right, what you're seeing. So is it bouncing off the 50? Yes or no? And then obviously you have, after that, you would have your obvious stuff. You obviously need the timing, to be correct. So time has to be correct. Right, so it's got to be in the first 4 hours. So you can ask yourself, like, simple question, is the setup happening in the first 4 hours of New York or London? Yes or no? Six could be like, can you identify the weekly cycle? Is it a accumulation, market maker, or trend? So the more of these things that you can identify, the better you're going to feel about taking the trade. Another thing is, what's the risk to reward?
Sorry, Mark, before you continue, number 5. So what difference would it make if it was in the New York or the London session? Like if that's like, as you talked about, the decision tree or whatever, if it's a New York session and you say yes, then what?
Well, the question is this setup happening in the first 4 hours of London or New York?
Oh, okay, it doesn't matter.
So
Okay.
it's just asking yourself, are you taking the trade in the right time frame? Right? Because if you're taking a trade at 1 o'clock in the afternoon, it doesn't make sense. If you're taking a trade at 7 o'clock in the morning, it doesn't make sense. Do you get what I'm saying?
Yeah, got it.
That's why that question is there. So you got to ask yourself, what's the risk to reward? You know, you can ask yourself anything. It could be like, is the stop loss higher than 25 pips? You can ask yourself that, yes or no. You can make it whatever you want to. Right. So the point about that is that if you're taking a trade, and let's say you're taking a trade, say you're taking a trade up like this, you see this, and then all of a sudden you get a railroad track right back, right? And let's say this is the middle of the range, the middle of the Asian range, right? And so the risk reward ratio, you got to know what is the size of that candle. So if that candle is 30 pips big, is it worth taking? Is that good risk reward ratio? If you're entering the trade there.
Wait for pullback.
Right. So if it's, let's say, 30 pips, right? For me, that's too big, and I won't take a trade. But I would take a trade if that sucker decides to pull back up to here, because now my stop loss is 15 pips, right? That makes a lot more sense to me. So in those situations, you may want to put in, let's say, like a sell limit here. That way, if it pulls back in the first minute of the next candle, it will put you into the trade. You know?
I have a question.
Yes.
About that actually. I see sometimes it'd be like a 40 pip candle, but then it'll be another 40 pip candle, another 40 pip candle. Is that because it's news induced?
Probably. But at the same time, you got to ask yourself, are you willing to risk 40 pips?
No, 100% not.
Then what the fuck does it matter?
Yeah.
You gotta ask yourself, are we trading for one day only, or are we trading for 10 years? People that are willing to risk 30 pips on a trade like this, they're trading for today. They're not trading for tomorrow, for next week, for next month, for next year. They don't care. They're willing to lose. If you're trading a standard lot size, you're willing to lose $300 is what you're willing to lose. So why take a chance on that? Because you literally are just acting like there's not going to be a trade there tomorrow, or like there's not going to be any more trades for the rest of the year or something like that. Like, that doesn't make any sense. It's like you're telling me that you want to trade for the next 10 years, but the trades that you're taking are telling me that you're just trading for today. And you think that there's no possible way that this setup will ever appear again in your life. And so you get FOMO all at the mouth, like a freaking zombie, just FOMOing all over the place. And then what makes it worse, here's what makes it worse, is that you end up not taking the trade, right? Because it's 30 pips here. It's 30 pips. You end up not taking the trade, and then this happens. Right? And then how do you feel afterwards?
Not gonna lie, it's kind of, but like whatever, you know.
You feel like, man, I knew it.
I'm not gonna lie.
I knew I was right,
That-
man. I should have
that
taken the
cost-
trade.
Hell
What was
yeah,
I
that's-
doing? I should have taken the trade. I know what I'm doing. So what happens next time that you do take the trade? What ends up happening?
reverses on your ass.
Literally what ends up happening next time is you end up getting this instead.
Yeah.
Right? Here's the problem with this. Here's why that happens. It happens because you don't have the data that you need to let you know that doing this is going to hurt you over an extended period of time. It may not hurt you today. It may not hurt you next week. But if you keep doing this over a period of a year or two, it's going to hurt you a lot more. So you may find one of these that may work out in your favor. Hell, you may find 5 or 6, 7 of them that may work out in your favor. But if you do that over a 3-year period, you're going to have a lot more losses than winners. You're going to have a lot more losses than winners. And so because you don't have the data to tell you that, you don't know any better. Right? And so how many people actually go back to get the data to know whether that works or not? How many people do that? Why do you think there's no coincidence as to why there's a 90% failure rate? Why do you think there's such a high failure rate? there's such a high failure rate because they got into trading forex through their buddy's Instagram account, who was showing them a demo account the whole time. I just made $1,000 off my phone. Look how easy it was. Woohoo. Right? So what does it take to be different than those people, than the 90%, 95%, whatever the percentage is that's stupidly high? What are the opposite people? What's the 10% doing that these people are not? What do you think they're doing?
Isn't that considered smart money?
Well, I mean, they're doing what they need to, right? They're doing back testing, they're gathering data, they're practicing the craft, right? They're practicing the craft is what they're doing. So how many people here watch what was that show that we were talking about earlier? How many people here watch Grey's Anatomy? Anybody here watch Grey's Anatomy?
I used to.
You used to?
I've seen a few episodes.
What do you remember in the episodes that you watched? Who do you remember? Like, give me some of the main doctors. Meredith, right? Meredith, Derek, what was the Sloan, Karev, and all of them, right?
Like Christine. So
Christina, right? So watching that show, you can kind of see how somebody goes from not knowing nothing to being the best person in their field, right? Because at the very beginning of the series, they all start out as interns, right? And by the time you get to season 16, 17, those interns, at least the ones that are still on the show, are like the top dog, top best of the best, winning awards and shit like that, right? And everybody's, oh my God, they're the, Meredith is like the general surgeon god, and Derek was like the brain surgeon god, and all that stuff, It's like, think about how many years, though, that it take Meredith or Christina or whoever to get to where they're at. I think on the show it's like, 6 years or something like that, right? Over what they were showing. So if you think that, a journey like that takes time, I think that becoming a surgeon or a doctor, I think is a lot easier than trading, because I think the psychological effects of trading are way harder than being a doctor. because I think that when you're a doctor, you're kind of like a master mechanic, right? You're fixing stuff, fixing human beings. Mechanic fix cars, right? How many different ways are there to change out a battery or to change an engine out or something? You know what I'm saying? They're very strict ways of doing things over and over and over again. Here, because there's so many different manipulations happening at the same time, things change. The psychology changes. So congratulations. You probably picked the hardest profession to try to get good at. So, I mean, really, the question is, do you think you're prepared to, to put in how much ever work it is to get you to where you want to get to? So, besides risk to reward, so we left off at risk to reward. What else is missing from the list?
Is it pinning to previous day high, previous day low?
Well, if we're talking about a type 3, it's going to be in the middle of the range, so you're not going to have that type of scenario, Yeah, I don't think you'd have that kind of scenario on type 3s. I think if you're doing type 1s, type 2s, that would make a lot of sense.
What about the type 3s that just give you one leg?
Yeah, most of the type 3s are giving you one leg, yes. That is very true. Most of the
does the wick of the candle, like if it rejects the middle?
Yeah, that's another good one. Yes. What happens, or the question would be then is, where is this thing at?
That would be in pattern though, no?
No, I think if anything, because that's more of a behavior.
Right.
So you can ask yourself a question of
Stop hunt.
Yeah, did you get a stop hunt? Did market makers give you a stop hunt? Or did they wick the middle of the range? Yes or no? Right. I think the next one would be like asking yourself, do you know what level you're on? You know what level you're on? Anything else missing? We have the pattern, you have TDI, you have directional bias, levels, accumulation.
Currency strength.
Yeah, you could use that too. Yeah, you could use that. Yes. You can use the currency strength. Actually, yeah. So you could do like, you can ask yourself, is the currency strength in your favor? Right. So if you're thinking about taking a type 3, if you're thinking about taking a type 3 on pound USD on a sell, then is the currency strength indicator well overpowered to the US side versus the pound? right? So does the US have 5 bars in the pound too? You know what I mean? Because if you're wanting to sell, on a type 3 down on pound USD, and you look at the strength indicator and it's telling you that pound is 5 and USD is 1, that's not going to happen. You know what I'm saying? That's not going to happen. So that's another good one.
That's one thing I noticed, but I did notice that the currency strength, they change pretty fast though.
It does, yes, it can change, absolutely. If you use the one that's
I used the heat one, the currency heat wave, the one you showed us.
Yeah, the currency heat wave has one where you can break it down by time frame. So if you use that, damn, the cat is super strong right now. Yeah, it's at the very first screen. You can hit multiple time frames, and it'll give you 15-hour, 4-hour, day, week, month. And right now the daily is kicking the ass on the CAD.
Yeah, because I remember pound CAD, CAD was like stronger, like from London to like New York, all the way through. I remember.
Yeah. So, but at the moment, I would use the main one, right? The one that just says strength.
Okay.
Because that one seems to be the overall direction. You know what I mean?
Right.
So that one seems to be the overall direction. All right. So what else? Anything else? So this is to give you essentially an idea of what you should be doing to narrow down your list. You get what I'm saying? Just an idea to kind of get your minds tinkering on this stuff, of what kind of questions you should ask yourself. At the end of the day, though, what I think is going to be super, super powerful for you is essentially to go through where's my thing at? This top 3 is to go through the chart, and like I was telling you earlier, you could just mark the patterns out, right? So if your pair is whatever pound JPY, and you're wanting this trade type 3s, then like I was telling you before, mark them with a T3, and just go back as far as you can and just mark them, mark. You don't have to replay the chart. You can just literally go through and mark. You know what I mean? And then compare all of those type 3s. Compare them. What do they all have in common? They're going to have things that are in common with each other. And so the most things that they have in common, those are the main questions that you're going to ask yourself about that specific pair. You get what I'm saying? So ask yourself, what do all these things have in common? What do they all have in common? Are they all pinning to the 50? How many times is a TDI going to help you in those type 3 scenarios? How many times are the EMAs, or the other EMAs, the 200 and the 800 above the 50. Because that would mean that you would have very strong directional bias in one direction. So all those things are important to know, and that kind of data is what gives you your advantage. Because you need to have some type of an edge when you're trading. You can't win on a consistent basis over an extended period of time without an edge, without an advantage. And you can clearly see that the shit repeats itself over and over and over and over and over again. Type 1s, 2s, and 3s, they repeat over and over and over again. So what are the common things between all of them? Between all the type 3s, between all the type 2s, whatever pattern it is that you choose to trade on those pairs. Questions? No questions. We're good. Do you have an idea now as to what kind of stuff you're asking yourself?
Oh yeah.
What kind of stuff you need to do?
I think the checklist, that plan with the checklist is, I think, is the key to success personally. For sure.
Well, I mean, having the plan in place, man, is going to be the key, because if you don't have the plan, bro, you cannot. You're literally going on a boat and you don't know where you're going.
Yeah, I feel
You
that.
literally do not know where you're going.
Right.
That's the problem with most of the traders. They don't have a plan in place, or the plan that they, here's the funny thing. The plan that they do have in place, they didn't make it themselves. They got it from someone else. But they never back tested the plan, so they don't know if it works. They don't know if it works because they never back tested it, so they don't know. They're assuming the other person did the work. What's the likelihood that somebody else did the work? You know? People are willing to literally put their money that they just worked on the line with somebody else's plan. And they didn't even take an hour. They didn't even take an hour to go back test it and see, does it even work? Does it even work for 1 month? Let alone 10 years. So the plan never doesn't work. And so to them, the strategy doesn't work. So guess what they do? They go on YouTube and they go on a YouTube binger, right? They go through all the YouTube classics, as I call them now. Trying to find another special strategy. And the cycle just goes on and on and on and on. It's an amazing thing.
Hey, Mark.
Yeah.
Yeah, speaking of pound CAD, don't mean to get off subject. That thing dropped 200 pips yesterday.
Pound CAD.
Yep, 200 pips
On
yesterday.
Friday,
Not
right?
Friday. I'm sorry. Yeah,
Yeah,
Friday.
yeah, that shit. I seen that, and I seen the currency strength. It was on the whole night.
Did it have news or something? Is that what?
No. I was in that trade. I mean, I didn't capture all of it, but it was nice.
Don't worry about it. I gotcha. I love it. It's awesome. Awesome.
I've been trading that pair a lot lately, so it's been moving.
Did you find a side chick?
No, it's just
It sounds like you found a side chick.
No,
Don't kill me, yo. Side chick.
And I can tell you another pair that I'm looking at that really it likes the trend and it moves. It's Euro NZD. It's very volatile, but it's not spiky. It's kind of weird. That thing will trend literally like 200-300 pips 2 days in a row. Then the next day do like 150 pip retracement and then keep going. It's yeah.
It's nice. Yep, NZD. Well, you got Euro. You got pound NZD, so you might as well go for Euro. Why not? I'm sticking to Litecoin and HBAR. This is what I'll be sticking to right now. They're pretty easy to trade. You just buy and hold. All right. When we do this, when we do a quick week on a pair, and why don't we do? Well, you just mentioned this pair. I'm going to do that pair real quick. I'll do this Euro NZD pair. Let me go to the R real quick. All right, so clearly trending cycle the previous week, right? Let's see what we got here. This is what, Monday? Is this Monday? Where's the I didn't say the day yet. Okay, so it is Monday. All right, so Monday. What happens on a Monday?
Mark, I have somewhere in my notes where you said if the price comes out of the top, just like how it did just now,
Yeah.
then either a type 2 or a type 3. Is that correct?
That if price comes out of the top?
The top or the bottom, the edge right there. Is it like how it's coming out now? We should look for a type 2 or a type 3, or no? Maybe I have that wrong.
Well, I mean, the first thing that you need price to come from the top or the bottom, right? You don't want it to come from the middle.
Right.
So this case is coming from the bottom. and it's getting stuck in the middle here,
Right.
right? And then you end up getting a star pattern right here. You see that?
Mm-hmm.
So there's a star pattern there. Here's your bounce off the 50 on the TDI. You see that?
Yeah.
So the question is, how far up does it go? Oh, by the way, I don't even know what's the average range on this.
130.15.
Okay, so
That's right now.
right. Well, that's all we can use right now is anyways 130. So we're looking at about give or take 390, 400 pips or so per like per cycle essentially. So 393 pips to around 400, give or take, you know, not to be perfect or whatnots. So if we look, if we go up one up time frame up real quick to the 1 hour, from the bottom here to the top here is about it's about 380. So this is a full cycle right here. So where's my thing at? Bring it over here. So from here to here, that's 3 times ADR, right? According to, you know, to today's numbers at least. So are we surprised at all that it's doing this? That it's, you know, giving you a buy signal? I don't think so. This almost looks like if we measure from this top to this low is about 300 pips or so. So type 3, setup, how high does it go? This is 530 still. So 745, 815. All right, so look at that right there. So it went up for the type 3, came up a good amount, good 80 something pips. So it went up 80 something pips, and then all of a sudden it just stopped. Why would it just stop? Does that make any sense?
Yeah, it's at the double zeros.
And it's, yes, 173, right. So now I'm kind of interested to see, okay, is 173 going to be taken out or not? So good observation there. So here comes the second leg. Right there. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 candles. See 12 candles between the first and the second leg. This is a 17 pip candle. So let's say what is that? Somewhere around here. That would be a 2 to 1 right there. But you need a pullback though to get in that trade for it to make sense. Is a pullback. So you had a pullback. And of course, you take it to the 50 because that's where it always goes. There's a go to the 50. It ends up going lower than that. So that was what, Monday. So Monday going into what, Tuesday. So I mean, notice how the EMAs, the 200 now is intertwined, essentially, and with the 50. That could be another second leg there. So, I mean, just look at the behavior. Look, it's like, how many times are you going to keep hitting? It's just stuck. It's stuck here. Right? It's stuck there. At some point, this has to break out. What time is this? This is 5:45. So it's probably going to go on the whole London session doing this crap. Look. Spike. The whole London session keeps going. Once you break through that barrier there, right there. See how I finally broke through all that crap? That's what you want to see. You want to see a break out of that. This technically would be like a first leg here, and all this crap is just building out the second leg, this final spike here going up to tag that. And now the question is, this is only 13 pips. It's only a 13 pip candle. So where would you even take this? Where would be the first place that you would want to take this, or that you could take this, because the EMAs aren't in your favor?
I know for me, two spots. For me, I would do a measured move range where it broke out of that low, multiply that times 2 to where it should fail, or hit the stops at the low of the day.
That's the stops at the low of the day. Yep.
But that low, right? If you keep going, like if you keep going up,
Oh,
like where that orange dot is,
okay.
to the left. Yep, like that, and then the high, the very tip.
Here.
Yep. Oh, yep. That times 2. That's the range expansion. I know it's called measured moves.
Yeah.
Typically, that'll be like the first distance where it should go to, which
So
probably will take you to the.
Basically, right? 28 pips times 2, then you're looking at what? Close to 60.
Yep.
Right, so if we do 60 pips,
That might take you to the low of the day. I'm not sure what that measures to exactly.
well, 60 pips will take us probably down all the way down here. Right? Somewhere around there. So we're already, I mean, that would be like a 4-to-1 trade, right? So you're looking at, I mean, just to get 2-to-1 is like what he was saying to the low of the day so far in Asia, right? That'd be 33 pips on a 2-to-1 risk reward ratio. Anything after that is a freaking free gift, free money, right? You're playing with like house money at that point. So all that's free money. So I mean that first
Was that 60 something? 80?
84.
Yeah, so it did a 2.3 range expansion. Yeah. Yeah, that's how I target my trades. Yep.
So you got 30 and then you got a free 35. It was being generous and it gave you another 35. All right, so good. Just based off of that, off of Tuesday, right? What do we learn so far from this week so far? From just Sunday, Monday, Tuesday, we have essentially created our major, basically our major areas right here. Right, we didn't go full one way because we fully reversed damn near the whole move on Tuesday after hours. So definitely not market makers out, right? The only way that this would be a trending cycle would be like, let's say, a continuation from the previous week, obviously. And that would basically mean that this pullback that it did was creating the lower high, and then now would need to create a lower low. In order to do that, then now you would be looking basically at more sells to get past that. Right? If it doesn't do that, what are we in then? What are we in if it doesn't get past
Accumulation.
accumulation, right? So all we'd be doing is accumulation. So just see what price action does. What does it do for the next day? What kind of behavior is this going to do? I mean, automatically, I don't even like it right now because it's coming almost out of the middle of the range. There you go. Went to the top. No, it's not going to go. The 50 is not going to let it go there. Watch. See how it's the 50s holding it basically at bay? Like that? Do you see the behavior here? Spike, spike up, spike, 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 spike up, spike, spike. Right? So far, that's the behavior that you have going into what? Going into the U.S. session. All right, so see what happens here right at the beginning of the session. See, I didn't do anything, meaning like you didn't really have, there's not any kind of setup here. For this to be tradable, like I would have wanted this to come, for this to happen down here. If this railroad track would have happened anywhere closer, that would have been a good trade to go up. Because you had the TDI here, confirmation as well. But you didn't have it here. You didn't have the price action, which is the most important thing, is the price action. Without price action, you're not going to have anything. So you need price action to be the first thing that you use essentially to confirm all this. Interestingly enough, now look how they're spiking to the top here, like the high of the day. That's almost the same as where the high of yesterday was. You see that? So this is spiking up to about 72,750, which is a quarter point. So this can't be, can this be a trending cycle? Is that possible for this to be a trending cycle?
Yeah, it has to break that high and continue.
Well, it has to break either the high or the low. One of
But
the two.
But it's Thursday and they just came from a major trend from the previous week. So they're probably using that week to accumulate to do something else for the next week. But who knows?
Exactly. But who knows? I think you know, man. I think you know. You know a lot more than you think you do. Smart guy. There's a, I'd say that damn near look like a, whatchamacallit? What's that? Quarterwood. I think if you, yeah. Looks like quarterwood. You have a little M here. Boom. There you go.
That doji in the middle wouldn't knock the pattern away, no?
Yeah, no. Yeah, I agree. But you got when you got the 3 bars straight, that doji almost like, because of this candle that followed it, you see how the candle that followed it pretty much took up the space that the doji did? You see that?
Yeah, yeah.
Because of that, the line chart just sees it as an M.
Oh, right. And it looks, oh, okay.
It just sees it as an M. That's all.
Interesting.
Yeah, it just sees it as an M. Somebody's busy making appointments. All right, so let's talk about this. You're 17 pips away, 20 pips away from the perceived low of the day. You made a pretty big move in London, kind of back traced here. You pinned to the 50. Anybody want to take a guess?
Price rejected the 50 and then bounced back down.
Right, price rejected the 50.
And TDI is also connecting with the market sentiment.
The market sentiment is a sell, right?
All right.
That's the market sentiment right now. It's a sell. What I'm saying is that you have a big move that happened during London, a pullback,
And you got yourself
the railroad track
yeah.
into the 50 at the beginning of the US session. This is probably going to be a continuation trade.
One directional move on London too, right?
Right, yeah. So is this too big? Well, it's like, where would you take this to? Be like somewhere around there, 25 pips or so. So you're just trying to make it there. Anything after that is fantastic. Right? There you go. There you go. So that was, how much was that? So another 50 pips total. So you got your 25 plus an additional 25 if you wanted it in 2 candles. And I mean, where did it go to? I think that's a coincidence. Does that magically just happen to go to the low of the week of that same week that you're in? Right. And I mean, technically this is what, it is 700. It's 700 to the T, 71,700 is where it went to. Look at that, came right back to where? Ah, came back to the 50. What a surprise. And get rejected again for the 50. And again, went all the way back down again. See that? Look at that. So Friday. All right, so we got a straight move down. Literally a straight move down. And it's gonna, looks like it wants to tag that low, right? It's either gonna tag the low or it's either going to, whatchamacallit, tag the low or pass it, right? So let's see what happens. So there's no setup there, obviously. So let's see what happens here. So how many people would think that's a type 2 pattern?
Sure looks like it.
Looks like it, right? So how many people would take that as a trade?
Candle is too big.
Candle is too big. Well, I personally see 2 problems with that. One is the candle is probably too big. And by the way, I haven't measured it, so I don't even know if that's true or not, but it's 13 pips, so it's not that crazy big. But there is one problem that really bothers me about this. What is that?
Price rejecting the 50 or the middle of the range, maybe?
No, not really. That really doesn't concern me because I mean, at some point, it's, if this is an accumulation cycle, right? We're expecting this to come back up again. So we're expecting for this to actually not have a problem with this and probably go up to here or here.
Right. Okay.
So that's not really the concern that I have. It looks good, but it looks too good in the sense that there's only 1, 2, 3 candles that create the apex. There's only 3 candles that create the apex. I don't like that. I want to have like 5 plus, really. And then the best scenario, I want to have at least 8. I don't know. Let's see what happens. See if I'm wrong or right. Now we're talking. You see the difference now? You see the major difference now? Oh, we're still in the U.S. session, or in the London session. Dojis for days. Look at that. Watch this shit go in the U.S. session. That's the last one right there. Do you see that one? Do you see that?
Yo.
You see that behavior right there? Boom. That spike down like that.
Check that stop hunt off the list, right?
Right, exactly. Exactly. So anytime is here, man. Any of these whatchamacallit, any of these candles here, whether it's this one, the next one, if you're paying attention, you want to be a greedy bastard, right? You could literally, that pullback down is like a 7 pip stop.
Yeah.
See what I'm saying? And granted, you could make it 15 if you want to, but like when you have a major pullback like that, when they're spiking stuff down like that, it's only really gonna give you a better entry, right? Because your risk is gonna be so small that even if you lose the trade, I mean, we're talking like 5-6 pips. The reward super outweighs the risk that you're taking on it. You know what I mean? So whether you take it, one of these spikes down or all the way up here, I mean, by the time a normal person enters a trade, you're already up 10 pips. Right? You see what I mean? So people say, is it possible to take these trades like this and be good or be successful over an extended period of time? The answer is yes, but you got to know the behavior. If you don't know the behavior, and I'm not talking about just market maker behavior in general, you got to know the behavior of that specific pair. Do you know what I'm saying? You got to know the behavior of that specific pair. So, I mean, this could go to, I don't know, and go anywhere and go right here. So any of these, entries here are possible. Any of them. There's another entry there. That's even another entry there. There's your another entry there, and there it goes. 2 candles. It took you to the 200. So in 2 candles, they take you to the 200. 1, 2. And that ends up being, probably looks like the bottom. Yeah, now it's going to go up again. So imagine if you get in on this trade and look at that. You fucking hold that motherfucker up.
That's a home run.
Look at that.
Woo.
Hold on, baby. Right?
That was clean.
You just hold it for 2 days. Look at that. It's a good chunk of change.
You'd expect the market maker cycle after that, no?
What's
Tuesday,
that?
one directional.
If they went directional, say that again.
Tuesday, one directional.
Tuesday is one directional, yeah. So for this to be a market maker cycle, you'd want it to be basically sells the rest of the week. But, all right. So this helpful?
Yes, sir.
All right.
Mhm.
What questions do you have?
How far you think HBOT will go up?
What's that?
How far you think HBOT will go up this year?
How far do I take H bar?
No, I said, how far do you think HBOT will go up this year?
Right, you're talking about the cryptocurrency.
Yeah.
Oh, okay. So I mean, for me, it's H bar is one that I'm holding long term because of the companies that are backing it. So their hash grab, which is H bar, is being backed right now by Google, IBM, and Boeing. Do I need to say any more?
Oh, I've been holding for a while too. I've been seeing a lot of people saying it might hit $2 or something like that, but I'm thinking it's going to be more too this year.
Yeah, I think $1 I'll be happy with just $1. But I mean, so this is, man, I've been holding on to this thing since February 6th. February 6th
Yeah, you got in early.
was when I bought that one. So yeah, but they've been they're backed by Google, IBM, and Boeing. So I think they'll definitely be making a lot of good moves for sure. That's one that I literally randomly found. Randomly found, literally. If it just takes half of the market cap that Cardano has, that would make that H bar at around $2.32.
Already at $1 now. That's half of that.
So if it gets to $5, I'll retire. You won't hear from me ever again.
I was giving it say, well, you already retired.
Like no more YouTube, no nothing. Don't talk to me.
Right.
Yo, Mark, quick question. You still doing that Sunday podcast, Saturday podcast stuff?
Yeah, we actually, we did it Saturday. We did it. I think it was at like what time was it? Like 2 o'clock or something, because I wasn't awake at 10 o'clock in the morning, man. I was sleeping. And I woke up and went to the gym, and Travis was like, hey man, we still doing pod? I'm like, oh shit, yeah, that's right. Let's do it. So I got back home and we did it actually. I got it recorded. So I'm editing. I'll edit it tonight and then I'll release it tomorrow.
Okay, that's cool.
Because we did
What
two
y'all talk about?
hours.
It was 2 hours.
Yeah.
Damn.
Yeah, we did 2 hours. We basically covered a whole bunch of different. We covered 3 major topics, right? So,
Yeah.
what were they? They were. We covered trading lifestyle. We covered what does it take to make a living trading, and we covered consistency. But we're gonna,
Nice.
each video on like 20-minute videos, So I have pretty much the next 3 podcasts already recorded. So it's just a matter of editing them and then releasing them.
How you like doing them so far?
It was weird, man. It's very weird.
How come?
Because I've never done a podcast before.
Right.
So yeah, it's very weird. But I think I'll like it the more I do it. And yeah, so we're trying to do it on the on
Discord.
Yeah.
Yeah.
But we couldn't get our settings to correctly record the audio. So like if I was recording, I couldn't get the correct settings to record Travis's audio correctly. So it wouldn't come out all like it just wouldn't come out right. So we just did it on Zoom. But the goal is if we can get the settings correctly on the audio part, then we would ideally like to do it on Discord so we could have you guys coming in and joining us, which was the whole point.
Right. Yeah.
So if anybody's really good with Discord settings, then reach out to me and we can see if we could fix it.
It shows how simple Zoom is, huh?
It is.
So
It's 2 settings, bro. It's either mic on or mic off.
it'll never lose value, I'll tell you.
So yeah, definitely it still has its value. And for me, for doing group sessions, all the group sessions are always going to be on Zoom. The trade room sessions, though, they're gonna be on Discord because I don't record those. The ones that I do record are these group sessions, and so Zoom is just super easy to record on. So it just makes sense for me to keep doing that. But yeah, so we'll see you guys. Where do you hear the podcast? So Tom, the once I edit the podcast, I'm going to release it in the Discord group first, and then ultimately I'll release it on YouTube. But I'll release it on the Discord as a video on the Discord, the FXN mentoring Discord. I'll release it there first for like a couple days, and then I'll release it on YouTube.
For the US sessions this week, are we doing on Discord or Zoom?
Yes, trade room sessions are going to be always on Discord.
Okay, done.
Just the only thing that's on Zoom is the Sunday group sessions and our one-on-one sessions.
Done.
That's it. All right.
I appreciate it.
You're welcome. You guys have a good one. We'll see you in the trade room on Tuesday.
Take care.
Yep. Have a good one, guys.
Thanks, Mark. All right,
Thanks, Mark.
Right.